Today, the Federal Reserve defended its decision to raise interest rates yet again this week, despite ongoing stress on the U.S. banking sector. Joining me live now to talk about the Fed's decision and the effect this could have on your wallet is Dr. Olaf Groth, professor at the UC Berkeley Haas School of Business. Thank you so much, Professor, for being here with us.
It's my pleasure. Good to see you and good to be with you and your audience.
Good to see you as well. So, Professor, the Fed raised its interest rates again this week by a quarter point. Of course, this is an effort to get consumers to slow their spending and borrowing, the argument being that they want to tame inflation, right? But why take this step if rising interest rates led Silicon Valley Bank and others to collapse in the first place?
Well, for one, the Fed is sending a pretty clear signal that one, has confidence in its analysis of the banking system, and that eventually we need to keep addressing inflation, and that, this tool that it has of raising its rates is really the key lever. However, many in the banking system are actually not seeing it the same way. And so we're seeing, the Fed portray confidence, but some of the major banking actors in the industry themselves are not really displaying that confidence, because what will happen now is that we are going to be seeing likely a credit crunch. And if that goes the wrong way and creates more pressure in terms of potential recession, then of course this raising of interest rates could have had the exact effect that we want to avoid.
Yeah, so it sounds like the Fed is in this tricky situation where they have to get inflation lower, but also keep the banking system afloat and keep consumers' confidence in the banking system. So are there any alternatives the Fed can take here besides raising interest rates?
Well, so the Fed has very limited levers, right? And the chairman has said that much. However, the Treasury Department, of course, has some other levers, and those include broader guarantees for the banking system overall in general, to provide backstops, to provide guarantees for deposits. But Janet Yellen, the secretary, has just come out saying, I'm not currently entertaining that. And of course, the markets dropped, promptly, because that could have an adverse impact on, on what happens with the economy. So the Fed currently it does not have any other levers, but the Treasury does, and is opting for not executing on those levers just yet.
Okay, so how confident should people be about the safety of their money in the banks at this time? You mentioned the backstop funding. We know that the Fed announced several insurance funds for depositors over the $250K limit, but is that reassurance enough?
Well, there's, according to the numbers that I'm seeing, is some $600 billion at risk in banks. However, most banks are, have the appropriate deposits to counterbalance that exposure. And so it seems as though experts are saying, look, the U.S. banking system overall is holding still. However, what consumers will have to reckon with is that banks are now going to get more conservative in making loans and are probably increasing requirements for collateral and things like that. So it'll get harder to borrow money at current rates. And that's what we're talking about when we're saying a credit crunch. And that could inhibit both things like home purchases and, of course, credit card payments, as well as on the business side, investments in labor and equipment.
Right. Out of curiosity, is there some kind of public ranking system that people can take a look at or tap into to understand the current health of the bank that they are banking at, just so they can make some well-informed decisions?
There are various banking indices out there in terms of, showing you what some of the, what the health of these banks is in terms of, the balance of liabilities and deposits. However, there really isn't a public banking, rating system that shows exposure on a moment-by-moment basis, right, as the economy changes. So there really isn't that kind of moment-by-moment transparency, and really we need that. We should have that kind of dashboard indicator, and maybe we can use modern technologies like artificial intelligence toward that at some point. But to my knowledge, that doesn't exist just yet.
All right, and switching topics real quick here, it is tax season right now. Are there any considerations that people should be making given the current economic climate with the banks and the interest rates?
Yeah, I mean, don't overlever, right? Meaning don't take on too much debt. That's number one. Number two, diversify your bank relationships if you have the luxury of being able to do so, especially if you're a small business owner. Make sure that you diversify your bank risk as well. Have different bank accounts at different banks. And then, of course, watch cash, right? Cash is king in times like these. So make sure that you hold enough savings, hold enough cash deposits, and have enough cash flow to sustain yourself if taking out loans becomes harder going forward.
All right, and last question here for you. I'd like to ask you about another big headline this week. TikTok's CEO testified before U.S. lawmakers about security and data privacy concerns just yesterday, right? Do you think a full ban is going to happen here? And what do you see being the short and long-term effects on Bay Area social companies like Meta and Twitter?
Yeah, that was quite the grilling for 5 hours that Chu, the CEO, went through. Look, the government has three options, and I think a ban is not the most likely at this point. That's option number one, but it will encounter the wrath of, I think, about 150 million U.S. users, of course, that even though the intention is to protect them, of course, have gotten used to it, and many of them are very young and arguably also Democratic voting. So there's some political calculus here as well. And then the second option is a divestiture, so that ByteDance, TikTok's parent company, will sell the company to a U.S. entity, but Beijing has come out and said, we don't really want to be doing that. So pursuing that path puts Washington on direct collision course with Beijing and could mean broader geopolitical, national security, and trade implications for both sides. And the third option, which I think is at this point hopefully the most likely, is this negotiation that is going on around technical safeguards. TikTok is working with Oracle. Could we put technical safeguards in place to ensure, maybe by surveilling the alleged surveillors, technically to make sure that U.S. citizens are protected on TikTok? Those negotiations have stalled, but there is still some hope for those to be revitalized, and that might be the most constructive path forward.
All right. I wanted to ask you about the impacts on Meta and Twitter, but it looks like we've just run out of time. We'll save that for the next time, Professor.
Sounds good.
All right. Thank you so much, Dr. Olaf Groth with the UC Berkeley Haas School of Business. Thank you. We appreciate your insight.
Thanks. Have a good weekend.
You too. All right.